Afternoon, everyone, and welcome to our part 2 of our 5th webinar in the 10-part free series for the year, Bookkeeping Fundamentals and More for 2020 Vision. So this is our second part. We've just completed discussing bank reconciliation and payroll STP finalisation. Now, what we really want to just emphasise is it's really important. We spent a lot of time in the last 20 minutes on bank reconciliation. Now, we did this for a specific reason. If the basis of your reporting being the bank reconciliation is incorrect, then none of your reporting for the end of the financial year will be correct. So that's why it's really important to focus on that. So now over to Sarah, and we'll try and cover off as much as we can. We're up to payroll. No, we've done payroll, sorry. Up to superannuation, profit and loss and balance sheets, variance analysis and budgeting forecasting. Starting the timer now. Let's try and keep it to 20 minutes and then we can break it if we have to.
Yeah, we've got a lot to cover, so I'll just speed right along. Jo, I think we do try to explain as much as possible and really give as much as possible. And we might be going into variance analysis as well next in our next webinar, but I just wanted to touch on those points. So at the end of the year, what is it that you're really looking at? Everyone wants to look at their bottom line.
That's it.
They want to look at their bottom line. So we will be covering that. But before we go into that, let's talk about our super. Yeah. So we just super is super. Okay, so I don't know if you guys have been all caught up in, you got to put in your super before the end of the year, 25th is the deadline. So what did that mean, really? It just meant that you can use your super as an expense in this financial year. So if you haven't, good to know.
Yes.
So what usually happens when you do wages is that super goes into a liability account. That means you owe the super based on the wage run that you make. And at end of every quarter, you're allowed a couple of days to make those super payments. And you have to do it within the deadline. At the end of the financial year, you've got a super deadline in July. And that is legally your requirement to put your super in by that date. However, if you want to take advantage of the ATO rules when you are on a cash basis, then you want to have the money go out of your bank account on the cash basis before that time and recorded by the super fund before the end of the financial year. Then,
fantastic. Sorry, just refer back to our first webinar if you want to learn more about cash basis. Sorry.
Right, exactly. Cash basis versus accrual basis. Exactly. So that's where we're at with super. But what does this mean in terms of your super payments? So at the end of every quarter, you're provided a couple of days, 3 weeks to be exact, that you need to make the payment of your super. And you have particular super reports that will allow you and show you exactly how much you're owing. Another thing that Xero allows you to do, if you've got a premium subscription, is it allows you to link to your bank account. So you have to set it up where you link to your bank account, and within Xero, you can identify which payments you want to make, how much, and to which accounts you want to make them. So you might have 5 employees all using different super funds. And instead of calculating all of them, going into your bank statement and going, this particular fund, I'll be paying this much for this person, you can actually do it all through Xero. It's just about setting it up.
Time saving.
Yeah.
One payment, a bulk payment, and it's like a batch payment if people understand that. And
Yeah.
it just goes out of your bank account and into various other super accounts. It's fantastic. If you
Yeah.
haven't got it set up, give us a call, give Sarah a call, and she can look at it for you. But seriously, it will save you hours. And
Yes,
that's what we all want.
that's
Let's
right.
save some time in our day.
And another thing that happens in the back end is that when you do that with super, you go into Zero and you'll say, all right, these are the ones that I want to pay, click submit. The person who is authorized to make the payment will get a message on their phone because we've set it up that way. And then they'll get their special password. They'll say, yes, go ahead. And the money goes directly out of their bank account. It's a one-liner. And then you reconcile against that one line as a payment. And what happens when you reconcile is that on the back end, and your journal entries on the back end, move your accounts payable, which is your super payable, into your expense. That means the journal has been done for you. And just by clicking that and making that payment in that way, you don't need to do any other back end journal entries, for example.
You don't need to be, a bookkeeper or an accountant to understand it. You literally click a button, you get a text message with an authorization code or whatever it is, or a link, and you click on that, and it all just happens auto-magically, as I like to say.
Auto-magically. But Jo, as wonderful as Zero is, and as beautiful as these auto-magic things are, if you don't set them up properly,
correct.
These
systems are only as good as the information we put into them.
That's
and
right.
the way we set them up, the basis that we set them up on. I mean, we can feed it junk,
garbage, and you get garbage. Yeah,
right. Exactly.
Garbage in, garbage out.
That's it. Exactly.
Yeah. So. And I guess this is another reason why I say that the bank reconciliation, and we spend so much time on that, it's about understanding our fundamentals, and then our reports will be good. So we talked about payroll, we talked about super, but what's important is that we need to reconcile every single liability account as well as our bank account. So if you have a wages payable account, which you do if you have staff, you need to make sure you reconcile that account. If you have not, then your reports will not be correct.
Correct.
If you have a super payable account, your super payable has to be reconciled too. And those are back end things that a good bookkeeper and a good accountant will go through. They won't just look at your profit and loss, they'll look at your balance sheet, and your balance sheet needs to be done right. So I'll take you now to the next bit, which is our profit and loss.
We all like to hear about our profit.
Oh, our profit, of course.
But you know what? Our loss is not necessarily a negative, so don't be discouraged.
Don't be discouraged, no. And we're all looking at our profit and loss, aren't we? At the end of the year, we want to know what's our profit and loss. And do you know why? Not only to see how well we're doing, but to find out how much tax we have to pay. Because
that's exactly right.
It's all based around your profit and loss. And of course, from your profit and loss, if you had your liabilities, you'll also have depreciation, possibly, and that is a paper entry. And so your accountant can take care of that. But for those small businesses that don't have any depreciation, this is what will help them and let them know how much money the financial statements will be providing to the ATO, the accountant will be providing. Go on.
One thing this year, though, that you'll just have to refer to the bookkeepers and accountants for, and that is, we don't have to pay depreciation necessarily this year. If we've purchased an asset, we can write off 100% of up to $150,000 assets.
That's right.
So again, there's some nuances with this financial year reporting, and so you really need to know what your profit and loss is, and that's what we focus on here. But anything like this 100% write-offs,
Right.
that's where we have to leave it up to the professionals. Well, I am anyway.
Yeah, Joe, you're perfectly right with that, because when COVID hit, the government used to have an instant write-off of 30,000 that was allowed. But
That's
with
right.
COVID, they have increased that to 150,000, which means you could have purchased a car, for example, over 30,000 and written it off completely in this year. And when you write it off, it hits your expenses right away and there's no depreciation for that.
And we're
So,
talking about writing it off financially, not physically. Just thought I'd
yes,
make that.
that's right. That's right. Another thing to be aware of is that if you purchase a car, but you didn't pay it off through your cash and you took finance on it, you can't write it off.
See, there's a trick. I didn't know that either.
Yeah,
There
because
you
you're
go.
really not paying for the car. It's a
No, you're
finance
not.
company. So you are again then left with just what you can expense based on payments
Yes.
that you've made as well.
Yes, exactly.
So,
Oh, there you go.
yeah.
Top tip there.
Top tip, you don't spend the money. You see, because the government is wanting you to spend cash. Mullahs,
Correct.
spend,
Yep.
spend. Not take, well, they want us to take more loans as well, but, you know.
But they'd rather us spend the money and keep the economy going and just build it up again because it's been quiet for a bit. Yeah, most definitely.
So definitely speak to your accountant and bookkeeper. Now, I just wanted to go back. I think we spoke about the two different types of reports that we've got, and I did make this one of my favorite reports. So you've got the new report and the old report, and I'm always about let's look at the old report. It's nicer in terms of the way that it's set out, or maybe I'm just biased because I don't know.
You're used to it.
Maybe.
We do resist change sometimes, but I understand an old style report rather than the new style report. So I'm with you on that one. So you want to select cash basis if you are reporting on a cash basis.
And
again, preferred series 1.
Yes, series 1. And of course, you're going to be putting June because you're finishing off in June, assuming everything else has been taken care of. You want to look at, maybe you want to look at by month, or you can choose by quarter, and you want to compare a couple of periods. And I'm saying, you know what? I think we want to compare all periods. Let's just try it that way. You can decide to sort it by account name. You can decide to add the totals, but I like to see the year-to-date totals, and I want to see that. So when I update, I will end up getting every single month of the year.
Fantastic.
All right. And then I'll get to see my totals year to date. I will also be able to, from this report, I can actually export, and that's what I'm suggesting that you guys do, is you export into an Excel format. When you export into an Excel format, it just allows you to manipulate a little bit differently, to look at things differently.
Okay.
Now, this is something that you would export, and let's just have a look at the report and how you can manipulate. But this is the type of report you're going to get. And you can then look at month to month, as you can see in this particular report. That was the sales.
Excel spreadsheet yet?
Oh, okay. Let me stop sharing and share my Excel screen.
Okay.
How's that?
Okay, now we can see it. Thank you.
Perfect. So this particular,
5.5 minutes.
Yeah, enable editing. All right.
And we've got 5.5 minutes left, just so you know.
Sure. So let's go back here. Let's stop sharing and let's reshare the screen. Sorry, guys.
That's okay.
Uh,
We can see 0.
we can see 0. I'm going to go back to the Excel report a bit later, but I just wanted to let you guys know that before you even get into that Excel report, it's always a good idea to open each one of your totals and try and identify whether you put the information in the correct place. So even though you are reconciled, your bank transactions look good, are you sure that you have identified the reports in the proper area? For example, you know, here we just quickly opened up the bank fees, but these are the bank fees. Now with bank fees, remember, you've got merchant fees and bank fees. So merchant fees get GST added to them and bank fees don't. So that's something to be mindful of. Are you putting them all in the one area, putting them in different areas? Just to take a look at and see what that's all about. Look at this maintenance charge. Yeah. So what I'm suggesting is that everyone go through all of these totals to make sure.
Verify.
Yeah.
Verify you've classified them in the correct area. Yeah.
And then if we then go into our Excel spreadsheet, after you've done that, you want to be able to do, this is a little bit of the variance analysis I said I was just going to touch on with budgeting and forecasting. I think it's a good idea to look at profit and loss, do the budgeting, forecasting there, and so on. So here we are, we'd be looking at each month and trying to figure out, hey, you know what, in the last financial year, what happened? Why did we have that as our sales? And will we be expecting that next year in our sales? How did we pay our bills? And is that something that we will be looking at to forecast next year? Did we perhaps pay things late and get penalized with other interest, for example? Should we be planning for, rent to be done on a regular basis and maybe, other expenses like, oh, you know what, I paid for my electricity, but I paid it late, and therefore I was hit with a couple more dollars than I should have. Things like that. So you'll be looking at, especially looking at your wages, which is your largest chunk, and then looking to see how much your wages will be in the following year. So this is the report you'll be using your past as an indicator of the future with a few changes. So if you're planning on, hiring extra, what would that mean? In which month would that make the change? So that's with your profit and loss. Then I would like to then, Joe, share the screen back to 0.
Okay.
And show you guys what to do with your reports for your balance sheet. All right.
Okay.
So when you go into your balance sheet reporting, this is the old report. No, I don't like that report. I am going to go back to the report that I prefer. Where's the balance sheet? There's the new balance sheet.
Oh, they've removed it.
Balance sheet.
Oh, there it is.
Here it is. Ooh. Now, a trick, Joe.
Yes.
You should not be using it on a cash basis when you're doing balance sheet.
And why is that?
Because you want to see what you owe in the balance sheet. Cash basis will only tell you what you paid. So your balance sheet needs to tell you what your liabilities are.
It does. Yes, quite right.
What's the point? There's no point in having a balance sheet on a cash basis. So the balance sheet here will then tell you what your wages payable are. So hey, let's take a look and let's compare it with the previous year.
Okay.
So you've got options here as well. but
Mhm.
you don't want cash basis. You want it on an accrual basis, and you want to
Yes.
be able to see what your balance is at the end of the year for your bank accounts and
Yep.
your credit cards. You want to be able to see what your accounts receivable and payables are.
Mhm.
It'll tell you what your GST outstanding, whether you owe. And this is another thing. You've got to reconcile your ATO integrated client account as well. A lot of people forget to do that because you may not be paying your ATO bills for your GST and PAYG and clearing that debt off. That is a
Okay.
debt with the ATO. So it should be looked at as any other liability.
Yes.
Your PAYG liabilities, so you've got your GST and PAYG separately there, and also
Mhm.
how you've done at the end of the year. So this is another report that you'd be looking at. We have not touched at all on our cash flow report, and that wasn't part of what we wanted to do today. We've spoken about cash flow forecasting before, and
Mhm.
so that would be something you'd need to look into. If you want to find out more, go back and take a look at our cash flow series. But
That's our 20 minutes for profit and loss and balance sheets.
fantastic, and that brings us
Very informative.
to all of these things that we've covered within the 20 minutes. Guys, that was just a sampler of all the many things that can be done and that we can help with.
Yes. So if you need somebody just to have a quick review and just make sure that everything is right in the back end, then absolutely let Sarah know and she can review that for you. I think you've got a special offer for the end of year, have you?
I do. And what I'm offering is a free review of your financials to let you know whether you've got them right or not, where there's issues that you need to look at. So, guys, anyone interested in the free review of your last year's financials, please contact us. We will do a 1 hour free consult with you, look at your financials, let you know what you need to work on. And yeah.
Fantastic. Can't get a better offer than that.
No, you can't. Fantastic. And next financial year, or next, I was right. Next month, we'll be doing your structure. So we'll be looking at what your structure is. Are you a sole trader or a company? And look at the different things that you need to consider when looking at your business structure. So
Fantastic. Very excited. That'll be good. I'll make sure I'll all set up correctly. But no, I think it's been so much fabulous information. As you said, it's just the tip of the iceberg. There is so much more to year-end reporting, but you've just got to get the fundamentals correct. And Sarah's offering to help you with that. So let us know how you go.
Thank you. Thanks, Joe. Bye, everyone.
Thanks, Sarah. Bye, everyone.